Everyone in crypto has asked the same question. It's the ultimate what if, the kind of question that fuels entire bull markets. We're talking about the holy grail. When will Bitcoin hit $1 million? For most of its history, this was a fantasy, a pipe dream whispered in obscure forums. But as Bitcoin has matured, as its price has gone from pennies to tens of thousands of dollars and even over $100,000, that fantasy has started to feel a lot more like a reality. The question isn't if, but when. To answer that, we have to dive into the core principles that govern Bitcoin's value, analyze the economic forces pushing it forward, and realistically assess the challenges it must overcome. This isn't just about a price target, it's about a complete reimagining of the global monetary system. The most fundamental part of the Bitcoin story is its supply cap. There will only ever be 21 million Bitcoins. This makes it a unique asset, fundamentally different from traditional fiat currencies like the US dollar, which can be printed endlessly by central banks. This absolute scarcity is Bitcoin's core value proposition and its most powerful argument for long-term price appreciation. This scarcity is hard-coded into its DNA through an event called the halving. Roughly every 4 years, the reward miners get for creating a new block is cut in half. This mechanism is not a bug, it's a feature. It systematically reduces the rate at which new Bitcoin enters the market. And I have made a video specifically about this topic on the channel before, so make sure to watch that to understand it completely, as it is one of the most important concepts in the crypto market. And if you understand this one concept, you will have much better chances of success and making money and building your wealth through Bitcoin. Think of it like this. Imagine a gold mine where every 4 years, the amount of gold you can extract is cut in half. If the demand for gold remains the same or increases, its price will naturally rise. Bitcoin's halving process is a perfect example of this supply shock dynamic. Every halving has been followed by a major price rally. As the reduced supply collides with persistent or increasing demand, the next halving is a highly anticipated event. Scheduled for 2028, and many analysts believe this cycle will be pivotal in pushing Bitcoin's price into a new order of magnitude. This predictable reduction in supply, in contrast to the unpredictable and often inflationary nature of government-controlled currencies, is what gives Bitcoin its long-term appeal as a store of value. To forecast Bitcoin's future, we can look at a few powerful models that try to quantify its value. The most famous and debated is the stock-to-flow model, or S2F, created by an anonymous analyst known as Plan B. This model takes a concept from traditional commodity markets and applies it to Bitcoin. It calculates the scarcity of an asset by dividing its current circulating supply, the stock, by the rate at which new supply is created, the flow. For gold, the stock-to-flow ratio is extremely high, as it would take decades of mining to double the current supply. Bitcoin's ratio increases with every halving, making it progressively more scarce over time. According to this model, Bitcoin's value is directly correlated to its scarcity. Plan B's original model predicted a path that could lead Bitcoin to a $1 million valuation in the years following the 2028 halving. While the model has had its detractors and periods where the price has deviated from its path, its core logic remains a powerful argument for Bitcoin's long-term potential. The most optimistic S2F projections put the $1 million mark somewhere between 2028 and 2032. Beyond S2F, another key model is based on Metcalfe's law. This law states that the value of telecommunications network is proportional to the square of the number of connected users. Applied to Bitcoin, the more users of wallets that join the network, the more valuable the network becomes. As Bitcoin's adoption grows, its network effect strengthens, creating a positive feedback loop that increases its utility and consequently its price. While scarcity is the engine, institutional adoption is the rocket fuel propelling Bitcoin's ascent. For years, Bitcoin was a playground for retail investors and tech enthusiasts, but that has changed dramatically. The approval of Bitcoin spot ETFs in the US was a game changer. It opened the floodgates, allowing massive financial institutions and their clients to invest in Bitcoin without the technical complexities of self-custody. Think about the sheer scale of the funds managed by asset management firms, pension funds, and sovereign wealth funds. A small allocation of just 1% of this capital into Bitcoin could send its price soaring. These institutions aren't just buying, they're legitimizing the asset. They are signaling to the world that Bitcoin is a serious long-term store of value and not just a speculative fad. This inflow of smart, patient capital is what separates the current market from previous bull runs. There is also a broader macroeconomic argument for Bitcoin's rise. In a world grappling with unprecedented government debt and endless money printing, Bitcoin is seen by many as a powerful hedge against inflation and a safe haven asset. The global financial system is built on fiat currencies, which can be devalued by governments through monetary policy. Bitcoin's decentralized, non-sovereign nature makes it a perfect escape from the system. As central banks continue to grapple with high inflation and as distrust in traditional finance grows, more and more people and institutions will look for alternatives. Bitcoin, with its fixed supply, is positioned to become the world's digital gold. If it captures even a fraction of the market cap of gold, which is currently over $14 trillion, the price would skyrocket far beyond $1 million. Some believe Bitcoin's value could eventually surpass that of gold, as it has superior properties. It's more divisible, easier to store, and simpler to transfer across borders. And I have also made a video about that, explaining why Bitcoin is the best money ever invented, so make sure to watch that video to understand that concept and why it's better than gold as well. But before we get too excited, we need a quick reality check. The path to $1 million isn't without its obstacles. It's crucial to be a realist and understand the risks. First, there's a regulatory risk. Governments around the world are still trying to figure out how to regulate crypto. A global crackdown or highly restrictive legislation could cause a major setback. While many countries are becoming more friendly to Bitcoin, the risk remains. Regulations could target exchanges, stablecoins, or even self-custody, each having a ripple effect on the ecosystem. Then there's a technological risk. While Bitcoin's network has proven incredibly resilient, a catastrophic security breach or a major bug in its code could erode trust. The development of quantum computing is another long-term concern, as it could one day threaten the encryption that secures the network. While this risk is still decades away from being a reality, and a lot of research is being done on quantum-resistant cryptography, it's a factor that Bitcoin will have to address. Another thing is volatility and speculation. For all its promise, Bitcoin remains a highly volatile and speculative asset. The price is still heavily influenced by market sentiment, and a major sell-off could lead to a prolonged bear market. While institutional investors may bring more stability, retail investors and speculative traders still play a significant role in its day-to-day price movements. And lastly, there's competition. While Bitcoin is the undisputed king, other cryptocurrencies are trying to solve different problems and could potentially steal some of its thunder. However, none have Bitcoin's unique position as the first, most decentralized and most secure digital asset. Its brand recognition and the network effects are unparalleled, making it extremely difficult for a competitor to truly dethrone it as a store of value. Taking all of these factors into account, what's a realistic timeline for Bitcoin to hit $1 million? First, let's look at the most optimistic view. Often fueled by the S2F model and a rapid escalation of institutional adoption, sees Bitcoin hitting $1 million within the next 4 to 8 years, putting it sometime between 2028 and 2032. This would require a continuation of its historical growth trajectory and a massive inflow of new capital without any major geopolitical or regulatory disruptions. Now, let's look at a more conservative and realistic view. This view acknowledges that the path won't be linear. There will be setbacks, corrections, and regulatory hurdles. This timeline suggests Bitcoin could reach $1 million by the end of the next decade, somewhere between 2035 and 2040. This is still an incredible return for an asset that was once worth less than a cent and accounts for the inevitable bumps in the road. And then there's the extreme long-term view. Held by some of the biggest Bitcoin bulls, like Michael Saylor, they believe that as fiat currencies continue to devalue due to inflation, Bitcoin's value will be a reflection of that decline, making a $1 million or even $10 million price tag a certainty in the coming decades, perhaps by 2045 or beyond. In this scenario, Bitcoin isn't just an asset, it's the new global monetary standard. The fact that we are even having this conversation, seriously analyzing the path to a $1 million Bitcoin, shows how far this revolutionary technology has come. It's a testament to its staying power, its fundamental design, and the growing global recognition of its value. So while no one has a crystal ball, the journey is just getting started. Of course, none of what I'm saying in this video is financial advice. Everyone needs to decide whether they want to invest in Bitcoin on their own, and always make sure to do your own research. These are all just my opinions. If you want more no BS videos about Bitcoin and the crypto market, make sure to subscribe to the channel. Thank you for watching, and I will see you in the next one.